Welcome to Charts This Week. My name's David Linton. Quite an interesting time for markets at the moment, especially with US stock markets with the sell-offs last week. So really just assessing what does that mean for markets going forward. Of course, this very big picture is a monthly chart of the S&P 500 index going back really into the 1960s. Very big sideways range there. We're experiencing much the same thing here. We've got this big opening out range. It doesn't really help us get a feeling for the long-term direction for markets. It's this uncertainty of this big sideways range that's not narrowing. So really markets have probably got quite a lot more congestion that they need to go through and before we can actually break out. So we want to actually see markets almost narrowing to a point where they would break out. And so we wouldn't be surprised to expect not to make a new high. We have to go through a bit of a congestion phase first. So the reality is this may well be quite a significant turning point in the market. And if we look at the daily chart, we see here we tested the cloud really strongly in May, but then the cloud flattened. The price actually did break a bit higher, making us all think that the trend was in train and we were going to keep running to new highs. And then we've come back through the clouds at a higher level now. And this lagging line last week, really, my general rule is about 3 days on the daily we want to see, and we've had that now. Really, Friday's move to a new low has really confirmed that we're now in a medium-term bear trend. So just think about that. Medium term, we're in a bear trend on the daily chart. So that does mean in the weeks and months ahead, we could expect the markets to actually be falling. So we do see now, we look to the Fibonacci ratios. We've got 1233 at 38.2, 1190, 1148. So we could see anywhere between sort of 1150, 1200 level is where this market might settle. So not great news for the market in the medium term. For the first time in almost a year, we're below that cloud. And here we see the 60-minute cloud in the short-term time frame. Remember, we're always, with the clouds especially, we're always talking about these the time horizons, and we've got this time horizon tables. You will have seen it in my book. We've got these in cards now. If you want one of these time horizon tables, just give us a call or email us and we'll send you one. But the time horizon is absolutely critical in understanding whether you're bullish or bearish. So we're bearish on the daily, bearish on the 60 minutes. So the 60 minutes is a short-term time horizon. That means that we really are seeing now that we're both on the daily chart and the 60-minute chart, it's quite bad news for markets. And we need to get back above 1310. We'd need a 40-point rise in order to be bullish on the short term. But now that we've got that cloud position below the daily, we expect because we've got a bearish trend on the daily, we would expect the 60-minute trends now to be longer. In the uptrend, the 60-minute trends down were quite short-lived. The counter trend moves being short-lived. Now we would expect these downward moves in the 60-minute chart to be longer because of what's happened on the daily chart. Really critical, that. Interesting though, we don't have any significant thrust targets. We've not thrusted off this top. It's really been something where we've rolled over quite gradually. So in fact, we don't really have any significant downside targets yet that we could point to. So really quite interesting, that. So from a market perspective, we're still waiting for a really clear downside. We may be just seeing a sell-off, that 50, 100 points, but it's not showing up in the daily charts. Of course, in the 1 minute charts, the downside targets are all there because we do have the price action giving those. And we've got downside targets. 1263 was given back at 1300. We're nearly there. 1251, 1225. These are the downside thrusts that we saw from last week's sell-off. We do have a counter trend one back to 1299, but it's not activated. We need to we need to move above 1280 to actually activate that target. So we really favour this downside position at the moment of about 50 or 100 point sell-off, and the short-term chart suggests that. If we look at currencies now, we see that euro really testing the cloud here on the price. So we're still bullish on euro dollar, but we are really testing this cloud. So euro still has the upper hand. If we go to the 60-minute chart, we do see that we've crossed through on the 60 minutes. So we've got a bullish picture that's hanging on the daily, but on the 60-minute, we're through on the cloud. We had this nice uptrend. So dollar strength this week, it looks like, on the versus the euro. Euro just weakening slightly. And then the 1 minute chart, we do have a downside target of 140.30. It's about a 3 cents downside, but we'd need to break below this sort of 143.20 level for that to be activated and to move there. So we do have downside targets and a downside downtrend on the very short term. Remember, a 1 minute chart is very short term. And then the daily chart on sterling, we see here we are actually through on the price slightly, so sterling not looking as strong as the euro against the dollar, but it is still bullish with the lagging line above the cloud. The 60-minute chart, much the same as the euro, bearish on the chart here for sterling this week. So dollar strength coming through is the picture, and in fact that's confirmed with sterling, dollar yen. Here we see the dollar weakening against the yen, and then now we're seeing some strength kicking in. So the turn is there. Everything pointing to a little bit of dollar strength. One of the big tussles over the last couple of years has been which would be the stronger currency, sterling or euro. Here we see the big sideways congestion trend, and then now we're seeing really good evidence. We had a new high. We're seeing really good evidence that the euro is going to strengthen against sterling. So euro strength is what we'd expect to see now over quite a long period, because we've had this very big congestion breakout come back to test. So really it looks like euro is going to have the upper hand over the longer term against sterling. Here we look at the Swissy, amazing run on the Swiss franc here, but interesting, in the last week or so we've actually curved through there, suggesting that run for now, 120 was the level that we sort of hit at the dollar. That run for now is over on the short term chart, so it does suggest short term strength against in the dollar. So everything's pointing to a really dollar strength probably this week. And then Aussie dollar, much the same picture, had was testing this 107 highs level, but we're now back below the cloud, so bearish for the Aussie dollar against the US dollar as well. If we get to oil is one of the most interesting pictures at the moment, really quite fascinating. Of course, we had this big fall off where we've come back. This is the WTI contract. We see the gap that we had around the time of the Libyan crisis, and we've really come back, and that's exactly where we pulled back to, that gap. So really interesting that was the low. What's fascinating still is that we've really tailed in on this price. It's bullish for oil that the low was put in quite early, and then it's showing some recovery. We haven't gone lower, and likewise it's a bit bearish that we haven't managed to make new highs. So we've got this real congestion zone going on, and normally the move into the pattern would suggest a breakout out of the pattern, but of course we do have the longer term trend dominating as well. So really quite hard to call WTI right now, and we need to see what happens in terms of the break. And I've put here, we've got the Fibonacci retracement levels of this run on. 50% would be at 89.54. That would take us below 90, would be obviously very bearish. But the picture on oil is quite hard to call at the moment, and that's really down to that narrowing of the range. And we see it here again, really testing the base of the cloud here, and the price is really struggling, but of course it's this lagging line that we watch, and the lagging line is not yet below the cloud. The level that we need to get through on the lagging line is about 95.50. We need to close sort of really below 95 to be convinced that this medium-term trend in oil is over. So for now, it's really congested, and this 104.73 level of the cloud is going to become quite significant as well for the price. So oil really stuck in a range. And what's interesting is that if you look at the point and figure targets, for some time we had 124, 111. We even have a 145 target off the thrust move that we saw earlier this year. But now this sell-off has given us a downside thrust target to 68, which has actually been activated. Now this downside target is what we call a counter trend move. It's not, because the trend is up, we place less importance on it. But of course, as we if we test new lows on oil, we're starting to look back to the mid-60s, and that's the early indication we've got. So we'd still favour the upside, but this downside target is now hanging over us. So really quite key that. Here we see the 60-minute chart, 60-minute candle chart of oil, and really what is amazing is just how this range has been narrowing in. So it's been quite profitable to use the 14-hour RSI for trading oil when we've been in this sideways range. Remember, indicators much better in the sideways ranges. So if you're in a sideways range, the indicator will give you fair signals both at the top and the bottom. If we're trending, it will be biased towards the trend. So the RSIs work quite well, but of course we're now getting to this point where probably this week the range is just narrowing that little bit, that we should expect a break either to the upside or the downside. So we're getting to an interesting phase in oil where we'll start to see whether we get a break. The 1 minute charts on WTI, we do have a downside downside target of 97.10. It's new, but we need to close below 98.60. We need to move below 98.60 to activate that. We see the downside targets last week at 99.40, 99.70 were given. We'd had upside. We really are at the moment on a bit of a knife edge with oil, and we need to keep close on those 1 minute targets. If we look at Brent, what's really fascinating about Brent, here we've got Brent and WTI overlaid on the same chart. WTI really is stuck in this range. Brent last week actually did break out of that range, so it has suggested this is a bit of a bottom, and it's breaking and running. That's really pushed the spread back up to historic highs. We're at 1986 on the spread between Brent and WTI this morning, and so we really have gone to really quite stellar levels on the spread. And interestingly, here we see the seasonality for Brent is very similar to WTI, of course, and we do see that this is the time of year where we start to flatten and fall off. The summer driving season, the run up to that is coming to an end. So maybe this is the time that we will look back and say that was the high, and now we're going to deteriorate slightly in oil. The seasonality suggests that, but interesting that Brent has broken to that new level, so quite key. Nat gas really now is in this place where it wants to break out of this congestion that's happened from this very catastrophic fall years back. We now see that nat gas could actually break and start to trend. So all the pain of trading this market, we might see an uptrend develop. We don't have to do much. We're above the weekly cloud now on the price. The lagging line for the first time is really testing the top of this cloud. So quite interesting. But we also know with gas that the seasonality says towards the end of the year. So we be a bit eager at this stage to see a break. But if we get the normal seasonal effect, that will take gas above the weekly cloud, putting us into an uptrend long term on US nat gas. So really quite interesting that. And then if we look at the targets, 540, 560, these are the medium term targets. Those are the levels we'd expect to run to once we break this $5 level, and they're activated, and the trend is up. So really quite key. The 60-minute chart, though, we see here, now this is the short term, this is the important bit, looks bullish in the long run, but short term, the 60-minute chart had a lovely trend going on for the last few weeks, but we're now starting to just get below the cloud. We're either going to be in congestion here, or we're going to start to see a new bear trend develop. And here I put the correlation between nat gas and oil, and we do see that at the moment they're just not correlated. We're in a low level on the correlation. It's very unusual that they stay correlated for long, so really what oil does will not likely have much bearing on what's going to happen to gas this week. They're not correlated right now. And then if we look at the short-term 1 minute targets, we had some upside targets that were given and met. We do have a new upside thrust target of 491.50, but we need to break above 479 really to get that extra 12 cents move in gas. But we do have a nice big target there. So a new high on gas this week would suggest we're going back to test those sort of just near $5 mark. And then if we look at MBP, European gas, UK gas, we see here how this 55 level was really critical for MBP. We've broken above it. Gas still bullish on the daily cloud here. So the picture for UK gas is that it's trending. These charts, by the way, are OTC data combined with ICE data. So you're bringing your exchange and your OTC data into one history. Really important that, because you start to get more information in the chart of all the trading across the market. And here we see we've done that with this 1 minute target. So we've got all of the trade data in there. 57.20 is the target that's coming off that. Really quite key that you can actually consolidate all of that price movement into one history to get sort of more clear downside targets. So your targets might not quite match the same unless you're using the same data. This is in the updater feed, of course. And then if we look at nat gas or gas TTF, still bullish here. We're a bit below on the cloud, which is a bit concerning on the price, but the lagging line really testing and hanging in there. So still, this is looking bullish medium term. We get to the 60-minute chart on TTF, and we see here how we did cross in early May, and we have been trending since. And quite a nice pattern here where we seem to be breaking higher. So TTF at the moment is bullish on the 60-minute chart, which means that days ahead, over the next week, the 60-minute chart is suggesting that TTF is going to go up. And of course, then we've got the 1-minute targets. These are very short term. The 1-minute targets, we've got 23.75, 24.30, 25.45. So TTF this week, good upside thrust targets. Keep a very close eye on these 1-minute charts for your price targets. I know many of you are doing that. And look at German baseload. This is really fascinating. This is a weekly chart of German baseload. And this is why you really do need long histories. Again, this is in the updater feed. You need long price histories in order to be able to do this long-term analysis. And here we see how in German baseload, how we got really congested in this range here. Really between this 55 euro level, 55 and 42. This was a really very big range for German power. We've broken through the cloud earlier this year, and now German power is in a long-term uptrend. So having had a few years of being very difficult to trade and a downtrend, German power in a long-term uptrend. We're through the cloud very clearly, breaking to new highs. The environment for trading German power this year, next year and beyond is looking very strong indeed in terms of having a trend in favour. And that's really quite key. Because when we get to the daily chart, we see that's coming through on the daily chart. Here was the break we had at the end of last year. We've got this sort of 61 level really, 75, the 61 level euros on German power, really constraining us at the moment. But then we also see that this is in line with a trend, so we would expect power to break to new highs at some point. Medium term, remember, we're thinking on a daily chart, we're thinking weeks and months ahead. And then if we look at the 60-minute chart where we're thinking days ahead, we do see that power is coming under a little bit of pressure. This morning, power just starting to make new lows. A bit concerning there, but really we're still bullish above this cloud. And of course, what I want to do now is go to the 1-minute point and figure targets. And I know most of you trading German power in Europe now are relying on these targets. Here we see 60.75, 63.75. We do have some upside. Notice how these targets have been given and met all the way up the trend. We do need to see a new high made to have a little bit more confidence in these targets, but the trend is up. So keep a very close eye on this chart. Remember, any new downside thrusts on the 1-minute chart will start to give you new downside targets. Keep a very close eye on the 1-minute targets. It's always important if you're trading power. Coal, we see here now, this is the 60-minute chart of coal. Coal, many people said, was like many other commodities, has topped, but really there's no signs of it here. We see the congestion, we're breaking out. We need to break to new highs, of course, to break out, but this doesn't really look bearish. We're above on the 60-minute cloud, still bullish on coal, but of course we need to break in order to say that it would start to run again. Gold, very much in an uptrend. Lots of people asking, what do you think about gold? It's still in an uptrend. You can't be bearish on gold right now. It's got long signs of a long-term uptrend, really quite key. Silver, on the other hand, we saw this catastrophic fall, came back to test the cloud. The price has now wandered through the cloud. The lagging line's not through yet, but this catastrophic failure in silver, this does suggest possibly that we're coming through the cloud, that we'll come into a new phase of a bear trend. We tested the cloud well here, but now silver does look like it's not really got the strength to recover. Not a lot different from the oil chart, except of course we're much more through the cloud on the price of silver. So this fall has been a bit catastrophic for silver. So just really the 1-minute targets, if you are trading silver, will be your guide for trading it short term. That's it for this week. Remember, I'm always happy to cover any charts you like. Just email me at david@updater.com. We're running lots of training courses in Europe over the next couple of months, so do get in touch if you'd like to come on a training course and learn all of the techniques. Until next week, happy charting. See you then.